What's going on with Enphase stock? Stock is up 17% after reporting earnings last night. This video is going to bring you the highlights as well as some opinions of where I think the stock might go. All right, you can see the stock is up 17%, $117.60 right now. And most of the other solar names are actually joining the party. So you see SolarEdge up almost 12% and so on. Now this stock is actually down about 10.5% year to date, even after this morning's pop. Over the past year, the stock is down still almost 50%. But over the last 5 years, the stock is up almost 1,500%. So when you look at the earnings at first glance, they don't really seem that attractive. In fact, the guidance doesn't either. Enphase Energy, you can see non-GAAP EPS, 54 cents. That missed by 1 cent. Revenue of $302.57 million. That's down 58.2% year over year. And it missed by 25.44 million. So that's a miss on the top and bottom lines. And you can see the numbers. They're going the wrong way. Check this out. This is Q4 of 2022 to last night's earnings. And you can see this is in millions. This is net revenue in millions. So you have 725 million roughly, 302.6. And the quarter before that, 551. Now look at the international. This went from 206.7 million. It actually ramped up to 293, then dropped to 200, and now only 74.6 million in this recent quarter. All right, so why is the stock up 17%? I'll tell you. Okay, so headline here. This is Seeking Alpha. Enphase rallies as CEO sees demand improving. Q1 could be the bottom. So the stock was up as much as 18.5% in early trading here on Wednesday. This is the earnings transcript, and I'm doing a word search just for the word bottom. And the word bottom is used a lot. In fact, I listened to the earnings call last night. It was very upbeat. We can see bottom, bottom, bottom. Analysts asking questions, the CEO responding, and this sums it up nicely. This is from the CEO. We think Q1 could be the bottom quarter. Europe is already showing early signs of recovery, and we expect the non-California states to bounce back quickly. Of course, California is a big part of the business, so something to keep in mind. But on that earnings call, there were several talks about new markets, new products. It was very upbeat overall. So Enphase told us that it expects inventory levels to normalize and demand for its products to pick up by the end of Q2. Okay, so that means the guidance was good. So they missed on top and bottom lines, but the guidance was good, right? Actually, not really. Revenue to be within a range of 260 to 300 million versus 315.94 million consensus. So really what the market's doing is it's trying to look past even the next quarter, and it's trying to look out into the future. The market's saying, hey, a lot of these stocks are expensive. What can we buy that could give us some gains here over the next 12 months? And I'll talk more about this later in the video. We'll also look at a chart. I'll tell you where I think the stock could be headed next. Now, looking at some of the metrics, pretty solid overall. You know, gross profit margin, 45%, still pretty solid. That gives it a C here on Seeking Alpha. Overall profitability grade, it's going to be an A. The net income per employee, TTM, $202,000 per employee. That's pretty solid. Now you can see the revenue growth, and these probably aren't updated quite yet, but you can see the revenue growth of 34%, but the forward revenue growth, 2.59%. So Enphase isn't really out of the woods quite yet, but the earnings call last night gave investors hope that there's light at the end of the tunnel. Now, from a valuation standpoint, Seeking Alpha gives it a C. But if you look at something like the PE ratio, so non-GAAP TTM, about 23. And then that forward is about a 25. And of course, that's because the growth has slowed down. This was in hyper growth mode, and it's taken a pause. You know why? Well, it's interest rate sensitive. Higher interest rates, people are financing, especially residential. They're going to finance these solar projects. And if the interest rates are high, they might wait until interest rates are going to go lower, especially if the consumer knows that interest rates are about to come the other direction, that the Fed's going to lower rates. So you might push the project off for a year. Now, on Fired Up Wealth, we cover secular growth trends, and we like to talk about the future, total addressable markets, try to capture growth with best-in-breed companies. And so, of course, Enphase is going to be one that's in that solar, electric vehicle, clean energy, green energy space. And if these type of topics are interesting to you, growth stocks, technology, building portfolios, diversification, long-term investing, then definitely subscribe to the channel and click that bell for notifications. So next, we're going to look at a chart, and when you see orange, that's a previous chart day. Yellow is going to be today's chart day or today's conversation here on YouTube. Now, we look at charts every single Wednesday in Patreon Discord. We call that chart day. And that's at 9 o'clock a.m. Eastern every single Wednesday on Hump Day. We just had one this morning. You can go check out the recording absolutely free. visit patreon.com/firedupwealth. There's a free trial for 1 week, no strings attached. So going back to middle to end of 2022, this stock was absolutely on fire. $324, $340, and Enphase fell off a cliff, basically December of 2022, and it fell off a cliff. Now back here, I said to the group, this needs to consolidate. Enphase stock needs to consolidate, and if it's me, I'm waiting for at least below $200. And of course, that was when the stock was $339, and people said, there's no way it's gonna go to $200. Now, of course, I didn't buy at $200, I continued to assess, and as Enphase stock kept coming down, I adjusted my price target, my entry point, 125 or less DCA. And you can see all the previous conversations in orange. And this stock actually got down under $74 a share. This was November of 2023, so not that long ago. And if you look at this, we basically have a channel, and today we broke the top of that channel and we're getting resistance right at the top of that channel. In fact, the stock pulled back. It was $118. It's already pulled back about $1.50 since I started the video. This stock really has pressure below 119. So it's going to have resistance at 119, and it needs to get above 119 for upside potential. That upside potential, 128, 135, but if it doesn't get 119, it can fall back into this channel. So what do I think about Enphase stock? Is it a buy right now? Should you buy Enphase stock at $115 this morning? Now we do own Enphase in both portfolios. My primary taxable brokerage, it's about $1.8 million. I own some in there. It is green. And we own some in the Fired Up Wealth community portfolio, and that is slightly green as well. So both portfolios own Enphase. I'm bullish on it long term, but for me, it's not a crazy high conviction company. It is one that I own and that I do like, but it's not on my top 10 or 20 list. When you look at the core of the business with microinverters, the thing about it, and I've said this from day one, it's hard to have a moat with what they do. Now, at the same time, Enphase is getting into more product lines, charging, and really whole home solutions. And of course, there's a lot of TAM, total addressable market, when you think of electric vehicles and clean energy, solar, and so on. So because of the fact that this is a secular growth trend, and I want to own stocks that can capture some of this secular growth, I think it's one of the better names in this EV, solar, green energy space. Now, the stock certainly could continue to rebound from here, break 119, you can see 135, even 150. And I've said this for a while, it's going to take some time for this stock to bottom. When it does bottom, it's going to rip. It's going to be a top performer when that happens. Interest rates start coming down, demand starts to pick back up, the stock is going to fly, and it'll probably be a leader at some point. Now, for me personally, looking at the earnings report and listening to the earnings call, there's some optimism there, but you are putting a lot of faith and conviction in the management team that they're going to deliver. So this is going to come down to your personal conviction level. And really, if you think about this, we've said 125 or less DCA 5-year hold. I still think that that will be a sound investment, that you'll make money over 5 years if you're a long-term investor. But it's very hard to time the bottoms of these, and they have these rolling bottoms. It's very difficult, and stocks can go much lower than you think that they will, like $75 in this case. And on the upside, of course, they can go way higher than you can ever imagine too. So my thesis has not changed. 125 or less DCA 5-year hold, but don't be surprised if this stock continues to see volatility. It could easily go back below $100, or it could be $150 next week, and neither would surprise me. Now, did this video help you at all? Because if it did, I need a favor from you. Please drop me a like, drop me a comment. Let me know. Are you buying Enphase stock here? Is it going to go lower? Is this a good investment long term? Drop a comment and let me know. I appreciate your time and attention. Have a great rest of your day. Take care.